Buying your first home is one of the biggest investments you'll make in your life, but there are some common pitfalls that can cost you thousands of dollars. Even if you've been pre-approved, you sat down with the lender and they told you exactly what you qualify for, things can still happen that either change your situation or disqualify you for that mortgage. So in this video, I wanted to share 6 of the common pitfalls or mistakes that first-time homebuyers make that either cause them to change numbers or completely disqualify them for that home or mortgage. And if you're new to the channel, my name's Enrique. I'm a mortgage broker here in Southern California. I make videos on first-time homebuyer education. So if you enjoy content like this, make sure you subscribe for more just like it. So without further ado, let's get started with the 6 things you should never do when buying a home. All right, number 1 is not buying a car, furniture, big ticket items, or even co-signing for someone. And that's because one of the most important things on your mortgage application is your income. That's going to determine the size loan that you qualify for. When there's more income, you qualify for a larger loan. When there's less income, you qualify for a smaller loan. And what these things do, the car payment, the payments that you're going to be making on that furniture, maybe the payments that are on that authorized user account that you co-signed for, or maybe you co-signed for someone that was looking to buy a car. We don't necessarily take a look at the balance, so it's not the balance that we're focusing on here. If you got a $50,000, $100,000 car loan, that's not really what the bank is going to care about or what the loan officer is going to look into. It's more the monthly payment, the monthly obligation that came with that car payment, that came with that furniture purchase. What these monthly payments do is they're subtracted from your income. So like we spoke about, when there's less income, there's less loan. What ends up happening is, someone will go out there, they'll be pre-approved or maybe not yet, but they'll go out there, they'll buy a car, they'll buy furniture, and now they have this $300 payment. And what we have to do is subtract that $300 payment from their income. So if they were making, let's say, $1,000, now their income on the mortgage application is only $700. What does that do? Well, it drops their income, in this case, by 30%. So let's say they qualified for a home of $100,000. Now they only qualify for a home of $70,000. So if they were out there shopping for a home, or maybe, they were in escrow, they were under contract for a home at $100,000 or maybe $90,000, now they only qualify for $70,000. So at that point, they would no longer qualify for that property. And this is why it's very, very, very important, especially if you're in escrow under contract, not to purchase any big ticket items or co-signing for anyone, because it will change your numbers. And this is actually one of the most common mistakes that first-time homebuyers make, and one of the most common things that causes people to not qualify anymore for that home that they're looking to purchase. All right, number 2 is going on a vacation or leaving the country. And that's because it can affect your income. Right? For the most part, we're going to take an average of your income. And if the underwriter or even ourselves see that, your average is decreasing because you're taking a month off or 2 months off, that's going to affect your income, which, like we spoke about earlier, less income means less loan. So if your income, if you were on track to make maybe $80,000 that year, and now because you're taking 2 or 3 months off, that income's going to be $50,000, that completely changes your pre-approval or how much you actually qualify for. So it's very important to be aware of this when you're out there shopping for a home. This way, you can utilize as much income as possible on your application. Doesn't mean you need to use all of it. Let's say you're pre-approved for $1 million and you only want to buy a home of $700,000. That's totally fine. But that's better than being out there looking for a home for $700,000 and only qualifying for $500,000. So that's one of the reasons why it's important not to go on vacation. The second is there's a lot of paperwork, and there's also some signatures that we're going to need that cannot be done over email. So it's very important that you're actually there physically, close, or at least in the States, in the city. So when the notary, for example, goes out there for loan docs, you're present, and we don't have to ship the loan docs from China or from Japan or from Europe, wherever you're traveling from. So very important that you're not traveling or on vacation when purchasing your first home. Third thing that you should never do when purchasing your first home is going off of just the interest rate. Just like anything, it's a package. It's the company, the brand, the price, the condition of the item, XYZ, right? It's not just one thing. So same thing when you're out there shopping for a mortgage. You don't just want to look at the interest rate. You also want to take into account, hey, how does this mortgage broker or loan officer service me? Do they answer my questions, right? Are they actually sending me good quotes? Believe it or not, you guys, I've had some clients that were shopping with different lenders and they sent me the quotes from those other lenders, and the other lenders were sending quotes that didn't include the title, didn't include the escrow fees, didn't include taxes or insurance. The home insurance was super underestimated. So when they saw my quotes, they were higher, but in reality, mines were truer, mines were more conservative, and the other loan officer were really more for flattery. This is what I'm saying, hey, check out the loan officer. Are they reputable? Do you trust them? Right? How do they talk to you over the phone? Do they want to get you off the phone, or do they answer your questions? Do they take the time, to explain things to you? So don't just go off of the interest rate. Another thing is, for example, discount points. A discount point is paying money in exchange for a lower interest rate. So one loan officer may be giving you a super low interest rate, but they may be charging you an extra $20,000, $10,000 for that lower interest rate. And the other loan officer that's giving you a higher interest rate may be a better deal because their rate might be, maybe 0.25% higher, but they're not charging you $20,000. So very, very important that you look at the overall picture when you're shopping for a mortgage, not just the interest rate. All right, number 4 thing you should never do when buying your first home is making large deposits or moving too much money around. What do I mean by this? Well, when you're buying a home, banks want to make sure that any money they're receiving from you can either be paper trailed or it's money that's been seasoned. What seasoned money means is not that you've added salt and pepper, but it's been in a banking institution for at least 2 months. So let's say, for example, you have cash at home, maybe $5,000, $20,000, and you deposit it into your bank account. They're going to see that it's been deposited, and they're not going to take that money. They're not going to accept it, even if it's on a silver platter, a gold platter. They will not touch the money. Even if it's $1 million, they won't take it until it's been in a banking institution for at least 2 months. Now, on the other hand, let's say it's money that you received for your job, what you do for a living, what you do for work. In that case, as long as it's a direct deposit or maybe it's a check, you don't need to wait for that money to be there for 2 months. So if you get, a check for $3,000, $5,000, $8,000, whatever it is for work, that money automatically or instantly can be used for the home purchase, for your down payment, for your closing costs. It just can't be used if it's cash under your mattress. So this is very important because oftentimes people will have that money. I've had a client where as soon as they got their check, they went to the bank, they took out the cash and they put it under the mattress. So their bank account was literally showing like a $20 balance, when in reality they had like $50,000 or $20,000 at home. All right, the 5th thing you should never do when buying your first home is quitting your job, changing jobs, putting in your 2-week notice, or even changing to self-employed. And that's because one of the most important things, like we mentioned earlier, is your income. So all these things involve your income, right? Quitting your job means you got 0 income. Changing your job, maybe you're going from W-2 to salary, or maybe it's going to be less income at this new position, whatever. If you're changing your job, your income can change. If you put in your 2-week notice, this has actually happened, or I've heard it's happened before where, someone put in their 2-week notice, the bank calls, hey, we just want to make sure that Bobby is working there. And they're like, well, he does work here, but he just put in his 2-week notice, so he's not going to work here 2 weeks from now. In that scenario, that person no longer qualified, and they had to wait until that person got a new job in order to qualify. Or becoming self-employed, because when you're becoming self-employed or you're self-employed and you want to purchase a home, you need a 2-year history of being self-employed, and we average out that income for the past 2 years. So if you just started that business, you just have 1 month or 2 months with that business, and your income is essentially going to be 0. All right, number 6 thing that you should never do when purchasing your first home is add yourself as an authorized user on a credit card. And that's because in some cases it does help you, because now you have this higher credit limit. But if that person, let's say you're not even using the credit card, if that person is purchasing a lot of things, that's going to reflect on your credit as well. So make sure that anything with your credit, especially adding an authorized user or even removing an authorized user, you communicate to your loan officer to make sure it won't affect or negatively affect your application. And that's pretty much it for today's video. By the way, I am licensed in California, so if you're looking to buy a home or maybe you want to get pre-qualified, feel free to reach out, send me an email, send me a DM on Instagram, and I'm happy to help.